Hi, good morning, everyone. Welcome, welcomes to today's Zoom call. And you guys know that this is this is my number 21 meetups for since we have started in March. I'm actually at home today. Long story short is I cannot go to the office because I have to deal with some website problems, and here I am, and I think this is getting pretty funny. Is like every one of us is getting used to doing meetings at home, and this is kind of the way that we're facing, and in reality, it's as this um, um, crisis or pandemic changes over time, it has affect every single one of us. But today is it the reason why I create call like this, because I believe in if you guys watching my videos for since 2 days ago, and I create something called 30 days challenges to basically help um, apartment investors, new and old investors, and veteran investor, green investors like me years ago, and how to slowly jump in and how to slowly and convert it and basically converting from 95, and which is a great start. That's how I started, as many people started, and in investing. And how do they jump? How do they slowly converting? And so this is a part of what I intend to put out there for all you guys. And so, welcomes to call number 21. So, for you guys that have known me, that is great. For some of you guys haven't known me, and this is my number 21 of Zoom call. I have started investing in 2006 in Canada, and slowly emergence to other part in Canada, and then in US, and then single family, eventually the multifamily and commercial. So um, I I started in entering the market of US and investing in 2012, and I'm really glad that we are in the midst of completing our first multifamily projects with investors, and really giving what they want, what we promise, and what we say that we would do. And there's really key thing, if you especially ones who are thinking of working with investors, helping investors to get the returns. You really have to keep your words. You really have to deliver what you said you're going to do. So number one 2021's call of 2012, 2020, and really I started Zoom call in March, and we I kind of set out to kind of challenge myself. To be honest, at that time, I wanted to have weekly Zoom call, and really at that time really didn't know that the most benefit for having a call like this obviously is going to help um, other new investors, or other investors who want to partner, potentially join force and working together um, to connect. But really key thing is I didn't know is actually helping myself the most. This is totally separate from what today's topic is, really creating a great routine, or a ritual, or a habit, or whatever like to call it, but it was really helping me to reach out and create a network, and to work with other people who, whether they are learning, whether they want to partners, is really low. So the reason why I said that to you is, maybe you're thinking of how to raise capital, and maybe you think of how to enrich your community, whether that's a small or as a big. It doesn't really matter. You can have a group like me, and you can have there's a be here, that's part of home meeting. Or you just have your own family, that you have two or three, even your immediate family, that you maybe want to work together to buy real estate. It doesn't really matter because at the end of the day, you can expand, and the only way to expand is to start doing it and learning, and that's how I do it. I mean, so I start at 2016, start sharing on meetings online, offline, and I'm I started from really nervous talking to people, and then eventually to be able to just to connect it, and still to be learning how to connect. But this is a good thing. So about 4,000 audience online, offline has been reached. But that's kind of a little bit of who I am, and why I do, and how I started. But today's this short and sweet. There's one thing that I want to keep it short and sweet is because I'm doing this um, month in and month out, weeks in, weeks out. I want to keep it short and sweet, 20, 30 minutes, and that's about it. And as you know that I slowly in inviting other speakers who are professional industrial practitioner in the real estate fields, and I have them to be in my call, and I continuously have them to be in my call. A month ago, I have Jim Stewart, and he owned and managed um, over 1,600 units in the states, and at the beginning, and that was at the end of June, and as I have the call with him, and then later on, I have invited other investors, and other industry professional in Canada, mortgages, whatnot. But the underlying principle is I want to give values. I want to keep you guys up to date, and that's really what today's uh, cause is. What is the future of primary investing? What is it? What is the update? So um, if you are thinking of investing in apartments, it's really no. It didn't start like that when I starting to invest in real estate. Um, but is really is a passive cash flow. You can actually get passive cash flow. Um, that single families is really hard to do at times, especially if you're investing in decent market. And whether it's Canada or it's in US is better, but when you invest in apartments, because of the scale economy, because of the large number of units in every single investment, to help you to have a passive cash flow, and especially if you play the strategy right. And I focusing on apartment B and C and area that had have huge, um, I would say have great huge potentials to increase rent by knowing the market, by doing the research on individual asset. And our last portfolio we just completed, as I said, increased 53% on the last 24 months of renovations, increased rent. And so you can do it because I firsthand experience have learned that you can do it, and you just have to learn how to find the properties, how to identify, how to know that you're doing the right jobs, by looking at the right market, and working with local people, local team, and find the true values. When you find true values, meaning usually is invest in areas that solid, and there's still going to be tenants that can live in there, and in that market, and continue living there. And another silver lining that I'm going to touch on is actually it's not all that bad right now. That we see a lot of bad news out there about real estate in general, that's a lot of different class in real estate, and apartments is arguably one of the less hard hit in terms of real estate. And if you find right and you can create values, um, but I over the course, I say I started doing risk investing, and create my network. And this is one of the things. Example is I start to work with investors, whether they want to invest passively or they want to learn how to invest actively, and I create a course for them. And so really this is the so if you firsthand haven't haven't joined our Zoom call or meetup calls, and this has never changed since the last 3 years. And I have laid down the groundwork that I learned from some of the great youth of mine in the space. Is really finding the market by researching it, raising capital, create the credibilities that you need to work with people and your team, and then find a good deal. Time like this is wonderful opportunity. I can't stress it over and over again on every Zoom call. This is the greatest time, if you are if you are wanting to if you are wanting to um, learn and how to do this. This is the greatest time, because you can find and look at the deals, and you can underwrite it properly. And basically, this is the first steps that I laid it out. The X steps, as I said, that I have created for my students. But today's Zoom calls, I want to make it short and sweet, as I said. But one important thing that I've been keep monitoring and keep saying is, you have to know the market, what the market's out there it's doing. You have to keep educating yourself. And one thing that I set out to do is, it's I didn't actually contract it, meaning that I actually look at more and more market at time like this, because as the crisis of the pandemic has been, going through the cycle. And at the beginning we have Q1, Q2. Now we're entering the Q3 soon. And what is the market is reacting, and every market has its own characteristics. Whether you're in the closed market, I don't invest in closed, but pay attention to the closed market as well. And the reason is they're all interactive. The flow of capital that is moving away from the closed cities, whether it's San Jose or New York, they're gonna be slowly moving into other market. And it's changing too. It's not like, it's not like if it has like, if I give you an example, if the market, as the money is moving from the coastal to the Midwest, or even to the Central America, Central United States, it doesn't mean that it's going to stay there forever. So you have to pay attentions, and by pay attentions to market research reports that I have been immensely benefit by keep learning, and keep myself up to date. So today's cause is about what is every market, what is different market is. I think of a couple example, but at the end of this, I extract a diagram talking about the top and lowest 20 of the market. That is from Marcus and Millichap, and I found it really interesting. The fact that um, um, it's summarized in the fact that, you would think that the whole market has been not doing well, and the fact is actually it is not necessarily. And so I want to talk about that today, and also about the class of performance. What is different class reacting to pandemic like this? What is attendance makes? What are they facing, and how they can be affording the different class A, B, or C? So we can touch on a little bit of that as well. And the degree of the fact that fair supermarket by the crisis, and in terms of rent, and then in terms of job market, because it's really highly related, as in where the company is moving from different markets. For example, one good example is, while uh, while you in New York is I know a couple months ago, the the tenants who's paying rent is only 60%. So there's about 40% of the people the tenants didn't pay rent in New York 2 months ago. But at the same time, there's company like Amazon, like yesterday on Wall Street Journal. So they said that, I'm going to sign in and have office space for 25 2500s. office lease. So going into New York, like going into our major hub MSA, because they have talent in there. So you really have to digest different kind of informations. But one thing that I would like to help for my investor is, and I would like to keep doing is, you really have to keep digesting, keep looking, and coming to meeting like this and talking to other people, learning about research, and you will have a full understanding. You never get into a crystal ball clear understanding, but the more you read, the more you will understand. So where is market performance? Health crisis is definitely changing. There's no doubt about it, about the demand and interfacing with the leasing. So some of the silver lining, some of the headline there is, the renters is relocating some markets and suburban areas, whether that's forced by financial necessity or decided to becomes, going to a safety market, smaller MSA, or even in the suburbans. So that is already happening. Class A rental in high cost, densely populated are more exposed to the trend because, my partner is in San Jose. He tell me it's like, you that's hardly any people on the streets. So that's, I'm pretty sure it's happening on every major MSA. This has happening to my hometown in Calgary. So it have definitely happened in all this MSA. So class A's is failing 1.5 nationally, and from Q1 to Q2. Of course, that is the first time we were ever seen since 2012, 2008. The greatest increase of rents, as the greatest increase of the trend. So tenants is seeking lower costs and more spacious. So we talk about was underlining for the type of apartments when we were talking about last week, garden style, individual access, and that's what we are looking at as investors. Individual access has more balcony space, have more park, have more open space for you to stay at home and continue to work in apartments and without living at home and have that kind of space. Help push a class A vacancy higher. There's no there's no secret. And so even though more apartments has been opened in the first half of 2020, with and that's also no surprise. So we have net absorption down to 75%. So because we just don't have that much absorptions, and while the deliveries is still going on. And so I add this slides here because at the beginning, we have been hurting a lot on how B and C is going to be affected, largely affected by because their hourly rate, and because most class C tenants, class B minus tenants, they are in the hourly rate. But what we have been finding is actually class B and C is really sustainable. Actually, that's a flight of um, um, trying to go from high class to low class, or affordable class, living class. And that's was something that everyone's were paying attention to March, April. And that's an interesting fact, and that's an example of why you have to pay attention, because um, the world keep changing, and you won't know if you don't pay attention to that. That's one interesting fact, and I added in here because that's something that is actually a surprise. And because you were thinking that all the class A tenants will actually, well, the class B or C tenants will actually move to class A and paying the same rent as the class A, paying paying no rent. It actually hasn't happened. But one example of that is, in the Bay Area, in San Jose, San Francisco, high rentals are facing the largest corrections at this stage of the health crisis. And this is from the Marcus Millichap report download yesterday. More listing available, expecting to continue. I add this because I see this. I'm seeing 300, 200, 400 units complex that is like, coming online, that in the time that they never see. Um, and you wouldn't see those properties in Anaheim, in Florida, in major MSA area. that, in that kind of size anyway. And even in Midwest, I'm seeing it more and more, and I'm expecting to see more and more to come. That is something that is there's a change because remember the market were like this for the last 8 6 8 years or so. So this trend eventually, um interesting fact is I keep a really close contact with all my poker's friends. And I remember at the beginning of the conversation, I always ask, so what is the market still strong? Is the market still strong? It's because everyone's paying attention. Um, the fact is the market may be still strong, but that's another term that you always hear. It's a price discovery. Seller and buyers, they're not meeting here. They large discrepancy in terms of what they're agreeing the market is going to be like. So that is going to be continue in the later on of the year. The most natural thought thinking is probably meet somewhere in between, but we don't know. But the more and more listing available online is definitely going to be providing a large um, supply, meaning that the price can potentially have a more affordable when investor like you and I are going in. So Class A in rent in San Francisco have 6.2% since March. That's pretty substantial, and 3.5 in San Francisco and Oakland area. So that's a Bay Area. That is hard hit by the pandemic. So during 2008, GFC, the crisis, Class A rental decreased substantially many times in US and didn't recover until later. So this is the background. And one thing um, that that I find it very interesting is the largely. So I didn't add it here, but it's actually largely disconnected between the stock market. The stock market is going up and going up and going up. And I'm not the stock person, so I'm not going to be commenting that. But I'm just finding it very interesting because when investors like us, we're looking at different product and investment and comparing to real estate, comparing to stocks, and they're all competition. They're all competitive product in different sense, competing the um, capital. So we are still seeing the markets going strong. In fact, yesterday I was seeing on Wall Street Journal that there's already surpassed the pandemic low in March. When March and April dropped, now it's already surpassed. I don't know what you guys pay attention. As far as I know, there's still millions of people. There's about 10% unemployment rate still going on US. So that eventually is going to be hit, as all this money dried up, and it's going to be eventually also going to affect millions of people in jobs and the living conditions. Going to be already seeing it going to fight for more affordability product in terms of apartments, and that is going to be eventually affected mm, on eventually on stock market and also real estate. So no one has crystal ball and no one's know when it's going to correct that. We know as an investor, I do know there's no substantial amount of great news that is going to tell me that the market is going to be improved substantially. And we talked about it many times in previous call. So the times comes in as in again. Question is the price discovery. When is the price? When is the right price? Where is the right price? Eventually, it will be coming down. We don't know. Like the, we talk about the price discovery and seller and and buyers. We are right in the middle of talking about top war right now. But going back, not all bad is bad news, and that's what not. I don't want to tell you that don't invest in real estate. In fact, I have one chart that is so interesting. If you only pay attention to this chart, you figure out actually some market is doing extremely well regardless of what is happening right now. And I just find it very interesting. I'm going to find if I can skip that to that graph and come back. Here we are. So I found this chart from Marcus in the chat, and it's basically is the rent. So on the bottom, it's basically all the major MSA, and you have from the left, you have San Francisco, Austin, Oakland, San Jose, and then Las Vegas. And then in the middle of the pack, you have New York cities, and you have more. You have more California cities, Orange County, and then going on the positive side, and that's what I want to you guys to pay attention is um, market like Phoenix, market like Nashville, market like Philadelphia, Detroit. Detroit is a very interesting market. In fact, I have very very good conversation with brokers there. But anyway, and Columbus, that's my market too. So so one thing that is really interesting is not all. So that's just like technology is really the silver line in the stock market, and same as real estate. Not all market is actually doing bad, and not all market is actually doing have the same degree of changes in terms of. In fact, you can see actually some of the markets actually, for example, the hot hit in tourism and hot hit that Las Vegas is another one. San Jose and New York City is actually surprisingly not as bad. It's shifting the rents. So where's all this decreasing the rent? And you see it on the right hand side. So the reason why I keep saying this is because despite the Bay Area and some of the closer areas, I've been always long time saying that those market they're doing really really well, but they're also going really really high, and that is meaning that you can cash flow, and you always find yourself in bidding wars. And if you're lucky, you find something that in the 2 or 3 cap, which is really really hard to cash flow and pay the mortgages, and you only looking forward to appreciation, which in time like this you basically is like non-existent. So and then what's translated to in that market like Midwest and other market that's really I always I'm basically is a champion of those markets because you can cash flow, and there's no more affordable market like in some of the Midwest markets, so that um, renters can actually moving like if you moving from San Jose area, you have to move at less affordable market. But if you're in a less affordable market, there's no way you can move. So it's basically is a little bit of, you can understand, it's kind of a little bit of lower um, proven, like the floor is already there in some of those market. You can't really find other lower market unless you move out of the country. But I mentioned a couple things here that I said it. This may be bad at the meantime too, but just don't just look at one side too. Amazon is building is actually getting more leases, getting more office space in New York, and same as Google has mentioned that this won't be indefinitely. But we have to pay attention. We have to pay attention. Like if we look at investing, you look at long term, don't looking at substantial increase of appreciation if it could happen, but not at this time. You won't really want to stay of cash flow and stay afloat and find those properties. As I told you about X steps, the number 2 step is really researching the market and finding the right deals. And while many market reporting class A rent decrease, other is increasing, as I mentioned to you on the graph. And some of the lowest dense and lower cost metro near um, the biggest gateway hub, including the Midwest, and multifamily more positive performance that I've shown you. Um, so some of the observations um, is we won't know what is a crystal ball. We don't have a crystal ball that where the clays A, B, or C is continuing to evolve. But we know at this moment um, that whatever I presented to you, some of the higher hit market, like on the close door, they are really affected, and slowly is already changing. Slowly, Another report I read, another news report I read on Wall Street Journal is, even though there's been a lot of news saying that people moving, it's actually about 10% to 20% of the people who actually consider moving will actually move from those areas. So those coastal market is not going to be like evaporate overnight. It won't be. It cannot be, because all the amenities, all the all the good things in those markets are already there. But what is affecting is some of the share of the market. California is what is number one in term populations on is equivalent of the whole Canada in term populations. So 10% of that, think about of the jobs of the employee of the tenants moving away is huge things. But it's not going to be it's going to be create temporary shift on those market, but it won't be detrimental in the long term. That's what we're seeing. As high tech companies moving from more expensive MSA, more into more affordable market, and that's a silver lining. That's a silver lining I showed it on this graph, right? Um, but as I said, I want to keep it short. I want to keep it informative. I want to keep it um, impactful for all you guys. So I always have bootcamp Zoom calls every day. I mean every week, and bi-weekly coach call that I'm starting already for the selective who say that one thing that I'm creating for you guys is I'm creating coach calls, and for all you guys who join me already on my home investing. So I'm creating a coach call. So some of you guys actually, Kelly is one of the signed students. So I'm creating Zoom call. I'm creating coach call for the fews that have stay tuned. By the way, I'm going to send out notifications. But over when I started this home study program in June, I have an idea. I want to create something that you guys can actually stay at home and um, don't have to. You can go in your own pace, so to speak, because we are all in a home. We can't really meet each other's as much as we want to be, and meetups and Zooms we can do that. But one thing that I do is, really happy. We actually over 120 subscribed in the first 4 weeks, 3 weeks, and we have numbers of investors learning how to invest. So I think this is a good thing, because I continuously created lowest price ticket items, and hopefully can help someone like you and continue to do investings, whether you are stay at home, whether you're affected by crisis or not. And you don't have to be, because there's so many um, resources out there, and I intended to keep helping you guys to do what you guys want to do, we stay at home and learn how to investing. And so again, this is what I said I'm going to do, is talk about various market classes and the degree of different class, different class and different market, different geographical areas, how they're affected, and positively and negatively to by these changes we are experiencing. Um, and that's it. And I hope and you guys have a wonderful day. And I intend to keep this short, because I find that's what we're doing it every week, and we want to make it short and sweet. We want to make this impactful, and so that you can go back to your day. And send me email if you need help on investing. Send me emails if you want to ask me about the home study program, or just any help, and want to chat, let me know. And this is my contact information. Hope you well. And so go out and find those deals, because there's a lot of deals out there. Without giving out so much information, there's a lot of deals out there, without broadening you down with all the details. There's a lot of deals. There's more deals than money that's out there, and obviously you have to find the right deals. You have to do the work. And let me know how I can help you. Okay. Thanks so much, guys, and really appreciate for you guys spending time with me this half an hour. I'm looking forward to see you guys next Wednesday, and I wish you well, and talk to you guys soon. Oh, Graph of the city. Let me send you. Okay, I will send you. Thank you for the messages. Talk to you soon. Bye. Ciao.